Discuss about the assets and liabilities today. So as we all know, the assets are the things which a business owns and the liabilities are the things which a business owes. That means assets are something which you can use to earn money in future, and liability is something which you have to pay back to the other people. So when we talk about what we own, what we owe, we own the assets and we owe the liabilities. Right now we'll talk about the types of the assets. So we basically have two types of the assets. One is current assets and the other one is fixed assets. Now if I have to define current assets, I'll say any asset which has an expected life of less than 12 months is current asset. So suppose you have cash in hand, so you'll obviously plan to spend it within 12 months. Otherwise you'll just get a FD done in the bank, right? Suppose you're having some cash, some bank balance which is in your savings account or current account. So you are expecting to spend it within the period of 12 months. Otherwise you could have got an FD done. You would have earned better interest over it. Again, if you have some goods in your hand, so you're dealing in washing powder, you're buying and selling washing powder. So you have some washing powder packets in your warehouse. So you're expecting to sell them as soon as possible so that you can earn money, earn profits out of it. That is why this will also be termed, the inventory of the business will also be termed as current assets. So all the assets which we expect to rotate, to sell off or to realize within the period of 12 months are known as current assets. All those assets which we know and we are expecting to use them for a period longer than 12 months will be referred as fixed assets. So say for example land, you bought a land for your office. You would want your office, your business to go on for a substantially long period of time, maybe 10 years, 5 years, 20 years, right? So the land becomes your non-current assets because it can be used for more than 12 months. Machine again becomes your non-current asset. Building again becomes your non-current asset. So these are those assets which you can use for a substantially long period of time. Okay, and this are not expected to be converted into cash anytime sooner. So this is more than 12 months. If you're expecting to use anything more than 12 months, any asset more than 12 months, then we'll refer it as the non-current asset or the fixed asset. Okay. So let's quickly recall back what are the current assets. Maybe the cash in hand, the bank balance, the inventory, which are the goods which you deal in, right? And the debtors. Debtors are the customers who have bought goods on credit from you. They'll pay you. So obviously you are not going to give debtors a time of more than 1 year to pay back. They are also known as receivables. Debtors or receivables. We'll expect to collect money from them within a span of 12 months. Investments, we are talking about short-term investments here. So you have spent money in shares and debentures of a company which you are planning to sell as and when the prices go high. So those are short-term investments. Prepaid expenses, if you make some advance payments, so if you have to pay rent to your landlord and you pay it in advance, then that is prepaid expense. Again, you would not be paying advance rent of 3-4 years unless you have a very bad financial planning. You would obviously be paying advance rent of 1 or 2 months or 3 months maximum. So that prepaid rent is also going to be your current asset. Now, coming back to what we own and what we owe. So if you are owning something, as I said, that would be referred as your asset. And if you owe something, that is referred as your liability. Even your capital is something which you owe to the owner. So you have to pay it back to the owner. So as we've discussed already, that the business is considered different from the owner. So owner is considered as an outsider. So we have to pay back the capital amount to the owner. So that is also something which we owe. Okay, so coming back to this, types of the assets. So we already did one category of the assets which are current assets and non-current assets. Now we'll go through two different categories of assets, which is tangible and intangible. Tangible assets are those which you can touch, see, touch and see. So for example, a building. So if you can see a building, a very beautiful building, you can see it, you can go near to the building and you can touch it, right? So that is the tangible asset. When you talk about intangible assets, it is something which you cannot touch, which you cannot see. So maybe copyrights. So you've written a book and you have the right to stop anyone from copying it. So that's a copyright. So copyright is your intangible asset because you cannot see it, just a document. You cannot touch it. It's a right. You cannot probably touch or see it. So that becomes your intangible assets. So intangible assets may you can count in goodwill, patents. Patents, you get patents when you experiment or research, do a research and you find out something new. Patents, copyrights, trademarks, right? So all these are part of your intangible assets. When we talk about current assets and fixed assets, which we have already done, current and non-current assets examples we have done. Fixed assets के examples can be cars, trucks, land, building, furniture, machinery, etc. Current liabilities and non-current liabilities. Okay, so what are current liabilities? Again, the definition is same, 12 months criteria. So anything which you have to pay back within 12 months is current liability. Anything which you have to pay back beyond that is a non-current liability. For example, you go to a bank and you ask the bank for a loan. Bank says, okay, I'm ready to give you a loan, but I will be asking you this money back within a span of 3 months. So 3 months is the time I have. After 3 months, I have to pay back the bank this entire amount of money. So this becomes a current liability for me because I have to pay it within a period of 1 year. But if the bank says that, okay, I am giving you a long-term loan, you can pay it back to me after, like, say, suppose 10 years. So repayable in 10 years. So in that case, a loan which I have to pay after 10 years, that's obviously beyond 1 year, becomes my fixed liability or becomes my non-current liability. We denote it as NCL also at times, non-current liability. How do you calculate working capital? So we learned how to calculate current assets and current liability.